Thank you for joining Kentucky Public Pensions Authority Tier 1 webinar. On the agenda today, we'll define each benefit tier, discuss creditable compensation, what to do if you terminate employment, service types, purchasing service credit, and retirement eligibility. We will also review the benefit calculation and health insurance. We will be covering a lot of information today, but hope you find the information valuable. KPPA administers benefits for over 410,000 members participating within at least one of the three retirement systems. Under the umbrella of KPPA, we administer County Employees Retirement System, often referred to as CERS, Kentucky Employees Retirement System, often referred to as KERS, and the State Police Retirement System, also known as SPRS. CERS and KERS have both hazardous and non-hazardous employees, while SPRS has hazardous employees. Each member is placed in a tier which is specific to their participation date. There are three different tiers, and we will get to those tiers in just a little bit. Knowing your participation date is essential to understanding how your benefits are calculated. It helps define your retirement eligibility and even defines your health insurance benefit tier. In addition to pension benefits, KPPA also offers health insurance benefits to eligible retirees and beneficiaries. For retirees with a participation date prior to July 1, 2003, KPPA pays a percentage towards the monthly contribution for health insurance premiums. For those with a participation date on or after July 1st of 2003, KPPA pays a dollar amount towards the monthly health insurance premiums. Additionally, those in the dollar contribution plan must meet certain service requirements. KPPA is a unique and complex pension system, but we are here to help you along the way. Each member is placed in a tier which is specific to their participation date. There are three different tiers. Tier 1 is for those members with an initial participation date prior to September 1, 2008. Tier 2 is for members that have a participation date on or after September 1, 2008 through December 31, 2013. And Tier 3 is for those members with a participation date on or after January 1, 2014. Tiers 1 and 2 are both considered defined benefit plans, which simply means that a formula is used to calculate the member's retirement benefits, whereas Tier 3 is considered a hybrid cash balance plan, since it uses a specific formula that determines the value of benefits for each participant based on their individual account. For today's webinar, it's important that you know your participation date and that it is prior to September 1, 2008. Knowing your participation date is essential to understanding how your benefits are calculated. It helps determine your retirement eligibility and even defines your health insurance tier. If you're unsure of your participation date, log into your member self-service account at myretirement.ky.gov or contact a call center counselor with your PIN at 1-800-928-4646. Now that we understand why it's important to know your benefit tier, let's take a look at how creditable compensation is defined for our members. So what is creditable compensation? Creditable compensation is earnings that must be reported to KPPA and is used to calculate your retirement benefits. Creditable compensation is the same regardless of which tier a member participates. Included in creditable compensation is all salary, wages, tips, and fees, as well as payments for compensatory time. It's important to note here that payouts for compensatory leave are considered creditable compensation for Tier 1 members. Also, lump sum bonuses, severance pay, or employer-provided payments for purchase of service credit and lump sum payments for sick leave, if the employer participates in the alternate sick leave program, are all considered creditable compensation. What's not included is living allowances, expense reimbursements, lump sum payments for unused vacation, and lump sum payments for unused sick leave, unless the agency participates in the alternate sick leave program. One of the biggest misconceptions our members have is that unpaid vacation time will count toward their retirement benefits. When a member takes their annual or vacation time as paid time off, retirement contributions are withheld. However, if a member receives a lump sum payment at their termination for the balance of vacation leave, this is not considered creditable compensation and therefore does not increase the member's retirement benefits. It seems the most obvious option to handling your retirement account is to retire once you're eligible. And while that is the ultimate goal, life happens and it doesn't always work out the way we planned. If you were to terminate from your employment before reaching retirement eligibility, you have a couple of options. You may leave your contributions at the retirement system and retire once you reach retirement age. And by leaving your contributions, your account will continue to draw interest, but most importantly, it will guarantee benefits under the tier plan which you initially began participation. For example, if I were to leave employment with state government and go to work in the private sector, but I choose to leave my money with the retirement system, I would be eligible to take a reduced benefit at age 55 or full benefits at age 65. If I left the private sector and returned to a position which participates with the retirement system, I'll pick up where I left off. I would still be considered Tier 1 with the same insurance benefits, same eligibility requirements, and same benefit calculation. When possible, KPPA always encourages you to leave your contributions and service intact, but unfortunately, that's not always a feasible expectation. So for those members that are not eligible to retire and cease participation with the systems, the member may take a refund of their account balance. Taking a refund allows a member to receive a one-time payment representing the money that they contributed and the interest that was earned. The money contributed by the employer is non-refundable and remains at KPPA. A refund can be paid by a lump sum payment or by rolling the earnings into another qualified retirement plan. Please note, if you do choose to take a refund, KPPA is required to withhold 20% for federal taxes, and it is possible you could be subject to an additional 10% excise tax. Now that we know which earnings are included in the member's retirement calculation, let's discuss the types of service credits that are included in the member's total years of service. Both are an important part of the benefit calculation that we will cover later in this presentation. The member's total years of service are made up of current service, sick leave service, and purchase service. Current service is earned as a contributing member of the systems. For each month that a member earns wages and contributions are reported for regular full-time employment, the member earns a month of service credit. Those months turn into years and eventually help in determining the member's retirement eligibility. Regular full-time is defined by statute and cites the member must average a minimum of 100 hours per month over a calendar or fiscal year. And for school board employees, regular full-time is defined by statute as 80 or more hours worked per month over the member's actual days worked. The next service type included in members' total years of service is sick leave service. KERS and SPRS members with the participation date prior to September 1, 2008, or Tier 1 members, participate in KPPA's standard sick leave program, and they're permitted to use an unlimited amount of sick leave toward their retirement benefits. Standard sick leave is converted into months of service credit at the time of retirement and therefore increases the member's total years of service. Each CERS employer is allowed to adopt their own sick leave policy. Therefore, participating in a standard sick leave program, alternate sick leave program, or not at all. CERS employers typically limit the sick leave service credit a member can apply to their retirement by 6 months. Any sick leave in excess of the 6 months may be purchased by the member at the time of retirement. Otherwise, the service is not credited to the member's retirement calculation. Alternate sick leave allows the member to include sick leave payment in the final compensation calculation as well as receive service credit. It's important to speak with your employer to determine how your sick leave at retirement may or may not affect you. It's also important to note that Tier 1 members may use their sick leave credit to count towards the retirement eligibility and their health insurance benefits. Here's an example of KPPA's sick leave conversion chart. You can find this chart on our website at kyret.ky.gov. Now let's go over an example. Let's assume a member works 8 hours per day and their employer verifies 900 hours of sick leave at their termination. By looking at the chart, I know that in order for the member to receive 6 months of sick leave, he or she must have 928 hours of sick leave at the time of retirement. In this example, the member is 28 hours short from attaining the 6 months. Therefore, the member would be credited with 5 months of sick leave at retirement. The minimum number of hours required for 5 months is 760. Members commonly ask, what happens to the hours of leave which was accumulated over the minimum required? In this case, it would be the difference of 900 hours and the minimum of 760 hours required to attain the 5 months, which is 140 hours of leave. Those hours may be used at the member's discretion following personnel guidelines. For example, the member may need to use those hours for doctor appointments between now and their pending retirement date. They may choose to donate them to a coworker, or they may simply leave the hours on the books. Whatever their decision, those hours will not be used in calculating the member's retirement benefits. The last of the service credit types to count toward retirement is purchase service. There are over 30 types of potential service purchases, and purchase service must meet some minimum requirements. The service must be a full-time position in accordance with KRS 61.510 and 78.510, and the service cannot be credited to another defined benefit plan. So, for example, if you worked out of state and wished to purchase that service to count towards your KPPA retirement, you must first take a refund of that service, as you may not have credit in 2 different defined benefit plans for the same period of time. The employer must provide verification in most cases to purchase the service credit in question. And of course, most purchase types require the member to be participating and vested in one of the systems within KPPA. It's important to note that purchases made after August 1st of 2004 do not count toward health insurance eligibility, with the exception of omitted service, hazardous conversion, and refund buybacks. Also, members with a participation date on or after August 1st, 2004 cannot use the service to determine eligibility for retirement, disability retirement, or death benefits. On your screen, you will see a small list of the available purchases, such as active duty military, part-time, and seasonal. For a full list of our purchases and eligibility requirements, please visit our website. There are multiple service purchases available upon determining a member's eligibility, but only a handful that do not have service requirements. The repayment of a refund requires only 6 months to validate the purchase, and it's important to note that reinstating service and wages from a refund is not reinstating the member's original participation date. Omitted service, or service where a member was participating in a regular full-time position and due to an oversight, contributions were not withheld. KPPA requires the employer to pay contributions for omitted service, but allows the member to choose whether they will pay the omitted member contributions. In order for the member to receive service credit, both parties must pay their portions. Summer months are months of service which the member is missing because they did not physically work 12 months in the year due to summer break. And lastly, hazardous conversion. Hazardous conversion is service that was classified and reported as non-hazardous position, but has later since been classified as hazardous. KPPA will allow the member to convert the non-hazardous service verified by the employer to hazardous service, and therefore changing the retirement eligibility, variables within the retirement calculation, and health insurance contributions. The most popular service purchase type requested is non-qualified service. Non-qualified service, or often referred to as airtime or ghost time, allows the member to purchase up to 5 years of service credit to increase the member's total years of service, and therefore they attain retirement eligibility sooner. In order to purchase non-qualified service, you must have a minimum of 15 years of service and work a minimum of 20 years. The service can be purchased in 12-month increments, but not to exceed 5 years. Non-qualified service must be purchased with pre-tax money, which requires some financial planning ahead of time. You may not write a check to KPPA to purchase non-qualified service. However, you may roll money over from a qualified plan or set up a contract to have payments deducted from your payroll before taxes while participating in one of the systems. Only those employees that have service prior to August 1st of 2002 will be eligible to purchase non-qualified service. Now, let me say that again. Only employees with service prior to August 1st of 2002 will be eligible to purchase non-qualified service. It's a common misconception that because a member is considered Tier 1, that they are automatically eligible to purchase non-qualified service, and that's not the case. For example, my coworker and friend is a Tier 1 member and began employment with KPPA in 2007. However, she does not have service prior to August 1st of 2002, which means she's not eligible to purchase non-qualified service. So for those members who have a participation date prior to August 1st of 2004, purchasing service allows them to retire earlier. A non-hazardous member can work 22 years, purchase 5 years of service, and retire without penalty based on having a total of 27 years of service. When you request to see the cost for non-qualified service, we will prepare an estimate assuming you do not purchase the service and another assuming that you do purchase the service. You will need to carefully compare the cost of the service credit against the benefits of the purchase and weigh the cost against the recovery of the investment. Look to see how long it will take you to regain the cost of that purchase. Members with more than one retirement plan administered by the Commonwealth of Kentucky may be allowed to combine service to determine eligibility for benefits, total service credit, and final compensation. Each system will pay a benefit based on the amount of service in that system. We have already discussed the plans administered by KPPA. The other plans are Teachers Retirement System, TRS, Legislators Retirement Plan, LRP, and Judicial Retirement Plan, JRP. For example, John was employed with a local Board of Education in a classified position and accumulated 12 years of service in CERS. He is now employed with the same Board of Education as a teacher and has accumulated 15 years of service in TRS. John would be eligible to retire at any age with no reductions in his retirement benefits because he has accumulated a combined total of 27 years of service. He would receive a retirement benefit from CERS based upon his 12 years of service and a separate retirement benefit from TRS based on his 15 years of service. Please note, in order to receive benefits from all the systems, you must submit the required retirement form to each system at the time of retirement. Now that we know the different service types in determining our retirement eligibility, let's discuss actual retirement eligibility rules for Tier 1 non-hazardous and hazardous members. In order for a non-hazardous member to retire with full retirement benefits, meaning no penalty, he or she must be a minimum of 65 years old or have 27 years of service. Notice I said age 65 or 27 years. If a Tier 1 member is 65 with 10 years of service, the member is eligible for full retirement benefits, meaning no penalty because they have attained age 65. Another example is if a member is 50 years old with 27 years of service, the member is eligible for full retirement benefits with no penalty because they have attained 27 years of service. Only the age requirement or the service requirement has to be met, not both. Now, to retire early or with a reduced benefit, the member can be any age with at least 25 years of service credit or be age 55 with 60 months or 5 years of service. In order for a hazardous member to retire with full retirement benefits, meaning no penalty, he or she must have a minimum of 20 years of service credit regardless of age, or age 55 regardless of service credit. To retire early or with reduced benefits, the member must be a minimum of 50 years old with at least 15 years of service. On your screen, you will see the formula to calculate Tier 1 benefits. The formula is as follows: final compensation multiplied by a benefit factor multiplied by the member's years of service. Members that wish to retire early will multiply that formula times a percentage which reduces their monthly benefit. So to determine your retirement benefits, whether retiring early or under normal retirement, we encourage you to log into Member Self-Service and use the benefit calculator. For the presentation today, it's important to define the variables within the formula to understand the calculation. So let's start with final compensation. Final compensation for non-hazardous members is their highest 5 fiscal years with the highest monthly average. And for hazardous members, it's their highest 3 fiscal years with the highest monthly average. Now, to clarify, your highest years or the fiscal years in which the monthly average is the highest. So there could be years that have less than 12 months, but may still be considered a high year based on the monthly average. Partial years can be used in determining the member's final compensation. And because we can use those partial years in the calculation, only 48 months are required in the calculation for non-hazardous, and 24 months are required in the calculation for hazardous. Lastly, Tier 1 members can include payouts for compensatory time at retirement, as it's considered creditable compensation and can increase the member's final compensation. Here's an example of both the non-hazardous and hazardous final compensation calculations. If we use the previous slide as a checklist, we can verify that the calculation meets the requirements as it's defined. Remember, non-hazardous final compensation is based upon the member's highest 5 fiscal year salaries, and hazardous final compensation is based upon the member's highest 3 fiscal years of salaries. In both examples, the correct number of years are represented based on their service type. Since partial years can be used, it appears the member is retiring August 1st and using the month of July for year 1, representing just 1 month into the next fiscal year. Final compensation for Tier 1 members permits the member to do this, as the calculation only requires 48 months for non-hazardous and 24 months for hazardous. If we add the number of months represented over the 5 years for the non-hazardous calculation, there are 49 months represented. If we add the number of months represented over the 3 years for the hazardous calculation, there are 25 months represented. Since payouts have compensatory leave and are considered creditable compensation, we can assume the payout was added into year 1 with the July wages, since it's paid upon termination. Now that we know our final compensation meets the requirements defined, we can determine the member's final compensation by adding the total money earned over their highest 5 or highest 3 fiscal years, and then dividing by the months of service that are represented within those years. For more information on strategies to maximize your retirement benefits, I encourage you to attend a Tier 1 Strategies for Retirement webinar. Benefit factors are set by statute and are based upon the participation date, the type of service, and the system in which the member participates. For those Tier 1 members participating in KERS non-hazardous, your benefit factor will either be 1.97% or 2%. Members which have consecutive service from January of 1998 through January of 1999 will use the higher 2% benefit factor. Members that do not have that 13-month period will use the 1.97%. So, for example, my participation date is July of 1999. I participate in KERS non-hazardous and I'm Tier 1. However, I do not have service from January of 98 to January of 99, so I use the 1.97% benefit factor in calculating my retirement benefits. KERS hazardous members will use 2.49%, and for Tier 1 members participating in CERS non-hazardous, your benefit factor will either be 2% or 2.2%. Members that have service prior to August 1st of 2004 will use the higher 2.2% factor, while members participating on or after August 1st, 2004, but before September 1st of 2008, will use a 2% benefit factor. CERS hazardous and state police both use a 2.5% benefit factor. For those members that have mixed service, each period of service will need to be calculated separately, but it will all be added together for your total retirement benefits. To avoid calculating mixed service, use the benefit calculator on member self-service. Now, the final piece of the formula to retire with full retirement benefits is the member's years of service. So let's take a look at an example to calculate the member's basic annual benefit. Let's look at the example on your screen. The member is Tier 1, non-hazardous, and participating in CERS. We calculated the member's final compensation earlier in the presentation as $45,623.76. It clearly states that the member is retiring with 27 years, and based on the chart from the previous slide, we will use a 2.2% benefit factor. So let's plug these numbers into our formula. $45,623.76 multiplied by the 2.2% benefit factor multiplied by 27 years of service gives us a basic annual benefit of $27,100.51. Now let's take a look at a hazardous duty example. On your screen, you will see that the member is Tier 1 hazardous duty and participating in KERS. We calculated this member's final compensation earlier in the presentation as $51,357.60. It clearly states that this member is retiring with 20 years of service, and based on the chart in the previous slide, we will use the 2.49% benefit factor. Now let's plug these numbers into our formula again. We take $51,357.60 multiplied by the 2.49% benefit factor multiplied by 20 years of service, which gives us a basic annual benefit of $22,469.76. If a member is eligible to retire with a reduced benefit, the amount of reduction will depend on the member's age or years of service at retirement. The reduction amount is the same for all members regardless of the participation date. An additional percentage is used in the calculation, lowering the retirement benefit. So for example, a non-hazardous member has 25 years of service and is age 55. If the member chooses to retire, his or her benefit will be reduced to 87%. It's roughly 6.5% for each year that the member is away from 27 years of service. Member self-service, or MSS, allows the member to access real-time information on their individual account. By clicking on Account at the top of the home screen, you can update your contact information, view your account summary and history, as well as access your member annual statement. Account summary allows you to view your service credit, contributions, and beneficiary information, while account history is an overview of your contributions and salaries through the previous fiscal year end. Annual statements are available to print or view from fiscal year 2012. By clicking on Services, you can calculate your first eligible and first unreduced retirement dates by choosing the Benefit Estimator calculator. This calculation uses real-time information, as in typically within pennies of the calculations our counselors prepare in office. Use the Service Purchase Calculator to estimate the cost to purchase service credit as well as approximate your monthly payroll deduction, if you choose to purchase your service via an installment purchase service agreement. You may also request an account balance letter, apply for retirement online, and upload documents to your retirement account. To register for member self-service, you will need 4 pieces of information: your Social Security number, date of birth, 4-digit personal identification number, and your email address. If you do not know your PIN number, you can request a new one in the second step of the registration process by clicking Need a New PIN. If you have an email address on file, you have the option to request the PIN be sent via an encrypted email. If you do not have an email address on file with KPPA, you may still request the PIN be mailed to the address we have on file and expect it to be delivered 5 to 7 business days via the U.S. Postal Service. At the time of retirement, you will have several options to choose from. There are many things you should consider before selecting your retirement payment option. While we are not going to review each payment option in today's webinar, I encourage you to log into Member Self-Service to determine the payment options available to you based on the beneficiary designation and their correlating factors which help to project life expectancy. It's important to carefully review all of your options and understand how each of them work. Who you name as the beneficiary of your account will determine which payment options are available to you. Also keep in mind, for most payment options, the member or beneficiary must be receiving a monthly retirement allowance to participate in KPPA's medical insurance program. MSS allows the member to assume various contingencies, and editing your beneficiary within the benefit estimator on MSS does not officially change your beneficiary designation. Under limited circumstances, a retiree may have the option to change their payment option and/or beneficiary. Otherwise, no changes can be made to the payment option or the designated beneficiary on or after the first day of the month the first retirement check is issued. Monthly benefits from CERS, KERS, and SPRS are generally subject to federal income tax. Members have the option to choose to have taxes withheld according to your marital filing status, or you can choose to have no taxes withheld from your payment. Your decision on income tax withholding is an important one, and you should discuss it with a qualified tax advisor. As a retiree, you may be subject to state income tax. All benefits attributable to service earned on or before December 31, 1997 are exempt from Kentucky income tax. The portion of the member's benefits earned January 1st of 1998 and after is subject to Kentucky income tax. However, this income may be excludable up to a certain amount. One of the most common questions we are asked is there insurance available to me after I retire? Let's move on to the next slide and we can go into more details. Kentucky Public Pensions Authority may offer insurance to eligible members which are under the age of 65 or are Medicare eligible. Currently, KPPA's under 65 insurance is the Anthem plans, which are offered to all state employees. Now, once a member becomes eligible for Medicare, the member is responsible for paying any fees associated with Medicare Part B, while KPPA may pay a portion or the full cost of the supplemental insurance depending upon the member's years of service and the level of coverage chosen. Now, this stands true for those members that are under age 65 as well. Eligibility for insurance is dependent upon a number of factors. One important aspect to remember is that to be eligible for insurance, the member must receive a monthly retirement benefit. There are multiple tiers for the medical insurance benefits. Most members are familiar with percentage-based insurance, but only those members with a participation date prior to July 1, 2003 will have the premium paid by KPPA using the percentage-based insurance calculation to determine their cost. You can see in this table the percentage-based insurance is broken into levels and is based on the member's total years of service to determine single level of coverage and total years of hazardous duty service to determine dependent coverage. For example, if a member is retiring with 27 years of total service and 17 years of that service is hazardous, we would first look at the member's total years, which would determine that KPPA will pay 100% of the contribution rate toward the single plan. To determine the percentage KPPA will pay toward the retiree's dependents, we would extract the hazardous duty service for 17 years in this example, which would allow KPPA to pay 75% of the dependent's cost for the health insurance premium. The less familiar health insurance tier is the dollar contribution insurance calculation, which determines KPPA's contribution toward the member's monthly premium for Tier 1 members with a participation date on July 1, 2003 through August 31, 2008. Eligibility for insurance benefits shall not be provided until the member has earned at least 120 months or 10 years of service in one of the state-administered retirement systems. Once it's determined that the member has attained the 120 months of service at retirement, KPPA will pay a monthly contribution for insurance of $10 for each year of earned service in a non-hazardous position and $15 for each year of earned service in a hazardous position. Upon the death of the retiree with hazardous service, KPPA will continue to pay $10 for each year of hazardous service provided the spouse is designated as the beneficiary and remains eligible for monthly benefits upon the retired member's death. Now, it's important to mention that the monthly insurance contribution will be increased July 1st of each year by 1.5%. The annual increase shall be cumulative and shall continue to accrue after the member's retirement for as long as the monthly insurance contribution is payable to the retired member or beneficiary. Hazardous duty retirees with health insurance dependents must file a Form 6256 each year. If you fail to notify KPPA of changes in your dependent's eligibility, child, and/or spouse, you will be required to repay any insurance benefits paid on behalf of the ineligible person.